Hello and welcome to the Friday, December 13th, 2019 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we're talking about some price increases for Model 3, as well as a new analyst note from Deutsche Bank with some interesting information. Tesla stock on the day today finished down 0.4% to $358.39. That compared to the NASDAQ up 0.2%. First off, thank you all for your patience with the delay in publishing yesterday's episode. That took forever to upload and process to YouTube, I think over 24 hours, which I did not fully expect, but it was a 55 gigabyte file, so I guess kind of makes sense. For those of you that have watched on YouTube, I do appreciate that. Every view and like and comment and subscription helps more people find it, and better performance for videos like this means more ability to use them as an example to go out and get other people to have conversations with. So I very much appreciate that. All right, let's get into the Tesla news. Yesterday, Tesla raised their prices, at least in the United States, on the Standard Range Plus and the all-wheel drive long-range Model 3. The SR Plus moves from $39,490 to $39,990, while the long-range dual motor moves from $48,490 to $48,990. So first take for me, this seems to be a very strong sign for demand. We're already heading out of Q4, the strongest quarter for demand, into Q1, the weakest quarter for demand. And then on top of that, we also have the expiration of the last segment of the federal tax credit in the United States at the end of Q4. So to raise prices a few weeks prior to that shows a lot of confidence in demand from Tesla, because if they were worried about demand in Q1, there wouldn't be much of a reason to raise prices now and then in a few weeks go back and lower them again, possibly lower than where they were already at. It's also not like this is a last-ditch effort to try to get a little bit more out of Q4, because this is pretty much happening at the same time that orders, new custom orders, are no longer within the Q4 delivery window in the US or any other country, really, for that matter. Tesla's site right now says, quote, California orders placed today will be available for delivery by December 31st. For custom orders ordering from the rest of the US and looking to take delivery by the end of the year, visit a store or view available inventory, end quote. So this price increase will help a little bit on some deliveries in Q4, but really this seems to be more of a Q1 move, which I think most people are expecting to be a pretty weak quarter for Tesla. So a couple thoughts here. This is actually the third price increase that we've seen over the course of the fourth quarter. In mid-October, Tesla increased the price of the Standard Range Plus by $500 and the Performance by $1,000. Then in November, they increased the price of all-wheel drive by $500, and then now again in December, another $500 increase for the SR Plus and $500 for all-wheel drive. So you add all those up, and compared to where we were 2.5 months ago or so, each trim is now $1,000 more expensive than it was. We've also seen increases on the black paint from $750 to $1,000, and then we've also seen a $1,000 price increase for the full self-driving option on November 1st. Depending on mix, those latter two price increases may not actually drive an average sales price increase, but they could, and raising the price on all Model 3s by $1,000 definitely will, obviously. And not only does all of that fall straight through to the bottom line, that gets coupled with increased production, which allows Tesla to spread the depreciation and amortization per unit over more units. That increases margin. And then as Tesla continues to build more Model 3s, they naturally find production efficiencies that also improve margin. So you've got these increased prices driving increased revenue, and then on the other end, you have these production efficiencies and such driving costs down continually, and that spread just creates more and more margin. I think we learned over the last year and a half and over the last quarter specifically that Wall Street is a big fan of profitability. So this pricing action increases revenue projections as well as profitability outlook, and it gives a sign of strength heading into Q1, a quarter that most people, I think, expect to be weak. But what if Q1 is not weak? What if Q1 ends up being a pretty good quarter? Well, that removes a ton of uncertainty. It speaks volumes for the strength of Tesla's demand. And if Tesla can eke out a profit, they're likely looking at S&P 500 inclusion. Between Q4 and Q1, Tesla needs about $250 million in net income to be profitable trailing 12 months. That is the requirement for S&P 500 inclusion, and then the preference is that the most recent quarter also be profitable, which would be Q1 at that point. Now, we're obviously going to have a ramp up going on during Q1, at least at Gigafactory Shanghai, and then potentially a little bit with Model Y as well. And those ramp ups put a strain on profitability while they're happening. So I think important to keep those in mind. But back to the main point here, if Q1 is a good quarter, then I think there's a ton of upside for the stock because not only are we heading into a naturally stronger period of time for demand in the rest of the year beyond Q1, but we're also getting further away from that tax credit cliff that pulls demand forward. So that'll also enhance demand outside of Q1 from a relative perspective. And then in the second half of the year, you've got Model Y in volume production. You've got Gigafactory 3 in volume production. We're potentially seeing Gigafactory 4 in Berlin being built out. And we're probably continuing to see progress with autonomous driving. I can't say it enough. When it comes to the stock, demand and profitability are the two most important things. And these price increases are positive signs for both. So yeah, I'm feeling pretty bullish at the moment. All right, let's move on to this Deutsche Bank note. And I'm going to read a couple of posts here from TMC because I don't actually have the note. And this user, Remster32, posted what appears to be a good recap. I don't know for sure since I don't have the note, but it seems pretty thorough. And there is important information in here. So I just want to read this in its entirety. There's kind of two parts here. It's going to be a lot. And then we'll come back and talk about some of the highlights. All right, so the first post is, quote, Deutsche Bank published their takeaways from their Auto Tech conference in San Francisco on Tuesday. Martin Viecha represented Tesla. Other OEMs in attendance were Ford and GM. Tesla takeaways. In China, Tesla is waiting for final government approvals so deliveries can begin. Deutsche Bank thinks these approvals may be related to Tesla being exempt from purchase tax. This may push deliveries to January. Deutsche Bank points out that the timing of deliveries could help/hurt overall margins. Tesla would not have to recognize the related costs if they don't deliver any made-in-China cars, though margins would suffer if they were to deliver before year-end due to the absorption of very high fixed costs. Tesla recently began delivering in South Korea. Tesla believes that South Korea could potentially be a bigger market than Norway due to the large subsidies. The ASP starts at roughly $27,000 in the country. Tesla explained why accounts receivable has been elevated in recent quarters. It is due to a large gap in timing between vehicle deliveries and cash collection from European banks. The gap in Europe is 28 days, China is 7, and the US is 3. Due to the large increase of Model 3 sales in Europe this year, accounts receivable has jumped up. Non-Tesla specific takeaways. There was a lot of buzz at previous auto tech conferences on fully autonomous cars. This year, the conference confirmed that the tech, level 4/5, is most likely further away. The focus in the next few years will be the quick adoption of level 2 plus products. Deutsche Bank is projecting an EV share in the teens by 2025 and over 25% by 2030. They believe that the companies that attended largely share these projections. End quote. All right, so that was the first part. So obviously the first thing that stuck out to me there was that apparently Tesla does not yet have final government approval for deliveries, despite all of the seeming news that we have seen, Elon replying to that tweet congratulating them for approval, even though he didn't acknowledge that specific part. Then we saw also the general manager in China posting a screenshot of a tweet saying that they had been granted approval. That all happened before Tuesday when this note was published. And then on Tuesday, Tesla removed the statement on the order page that said, quote, made in China Model 3 is subject to regulatory approval, end quote. So I don't know. I mean, I've looked at all the information I can look at, and this is where we're at. I think we just have to wait and see until we see actual deliveries. The South Korea piece is interesting, saying that it could be a bigger market for Tesla than Norway. Tesla delivered about 4,000 vehicles to Norway last quarter. This quarter so far, they're only at about 1,200, but it has been a significant market for Tesla. South Korea as an auto market overall is much, much larger, delivering about 1.5 million units in total each year, versus Norway's more like 150,000. So pretty exciting and definitely worth spending more time looking into the incentive system there. Then the accounts receivable stuff, we've kind of talked about that stuff. So we'll move on from there into the second part of this post, which reads, quote, Deutsche Bank released another report today with some more details from the investor meetings with Martin Viecha at Deutsche Bank's Auto Tech conference. Most of the material was already reported, but here are details that I did not see previously. On the Cybertruck, management indicated that pre-orders for the Cybertruck have surpassed 250,000 and that there is solid demand coming from regions with traditional US pickup geographies. The battery pack sizes for the Cybertruck were not disclosed, but Tesla believes that they can achieve the targeted ranges and price points with the current generation of batteries. on Gigafactory Shanghai, Tesla will be building another facility at Gigafactory Shanghai to manufacture Model Y on the south side of the existing building. This will likely have less than 150,000 capacity initially. On Gigafactory 4, Tesla believes there will be subsidies given to them by the German government for Gigafactory 4, given the large amount of recent layoffs by local automakers. On other, Deutsche Bank believes there is little need for Tesla to raise more capital in the near term, citing the $5.3 billion in gross cash exiting Q3 and the potential for that to grow in the fourth quarter of 2019. They also note that there are no maturities due in the next year. End quote. All right, so on the Cybertruck piece of it, obviously they've surpassed 250,000. That was the last update that Elon gave us, so them surpassing it makes sense. The solid demand coming from regions with traditional US pickup geographies. I don't know if we talked about this on the podcast, but ARK Invest did some good research on this, and they saw that Google Trends data was showing pretty strong interest from those more rural population states. So that seems to be supported here, which I think is obviously a good sign. And then the battery pack piece of the Cybertruck is interesting, that Tesla believes they can achieve those targeted ranges and price points with current batteries. That doesn't mean they'll use current generation batteries, just that they potentially could. So that either means amazing production efficiencies from the Cybertruck, which we know there will be some of, we just don't know the extent of them, or it bodes really well for the rest of Tesla's lineup. Likely a mix of both. And then the Gigafactory stuff, I think, is relatively expected. And then I know I said there were two parts of this, but then I reached out to Remster just for approval to kind of read all of this verbatim. And he let me know that there was actually a third part, which was the first part that I had overlooked. So here is that first part, which reads, quote, Deutsche Bank hosted Martin Viecha, Tesla head of investor relations, in Frankfurt last week for investor meetings. Here are some of the highlights and new details I haven't read before. Quote, Shanghai Gigafactory in China. The Shanghai factory will be a template for future gigafactories. Expect the Berlin Gigafactory to look similar. The factory was designed with simplicity in mind. They note the car does a single loop around the factory and is then finished. When asked about manufacturing efficiencies in China, Tesla cited a third-party teardown analysis, which shows at least a 20% lower cost of production. Note, I'm unsure if this report is specific to Tesla or the general auto industry. It's unclear. Tesla did not disclose its own savings. The battery factory's initial output will be 10 gigawatt hours. CapEx to get the initial output is, quote, less than 100s of millions, end quote, which is financial speak for somewhere above 100 million. The China subsidy policy will bring the Model 3 price down from 328K yuan to 299K yuan, including value-added tax. Tesla plans to build 100 supercharger stations per quarter in China. This can possibly be accelerated to 150 to 200. Berlin Gigafactory. Tesla still expects construction to begin around January 2020. Vehicle production from the Berlin Gigafactory is expected to begin in 2021, or a max 2 years from the start of construction. CapEx for Gigafactory 4 is indicated to be slightly higher than Gigafactory 3. Model Y. Since Tesla wants to be at volume production for Model Y next summer, Deutsche Bank believes Tesla will start ramping initial production of the car in Fremont as soon as a few months from now. Manufacturing costs for Model Y are about the same as the Model 3, yet average selling prices are about $4,000 higher for CUVs, suggesting higher margins. Other tidbits. There was a 27% take rate for full self-driving at $6,000. This must be data from before the recent price hike to $7,000. Tesla indicated that less than 5% of US Model 3 sales come from reservation holders and less than 10% for global orders. Tesla did not provide an update to its battery cost curve. However, Deutsche Bank thinks it's safe to assume that they are below $100 per kilowatt hour at this stage. Tesla expects Model S range to climb roughly 15% per year. End quote. On the China piece, I think maybe the 100 supercharger stations per quarter there is the most interesting part. There are only 387 supercharging stations in the Asia-Pacific region right now, and only about 60 of those are new year to date. So this would be an incredibly steep ramp up for supercharging station installations in Asia. I mean, 100 per quarter is more than Tesla's installation rate globally right now year to date. That's about 75 per quarter. So I don't know what the timeline would be for this target for China, but that's a lot. And this does say stations, not specific chargers, which 100 per quarter would probably be too low for chargers. So pretty exciting. The subsidy piece is interesting too, because what I had seen floating around online was the subsidy of 24,750 yuan. and this is saying it's more like 29,000 yuan. The 24,750 had matched up with the math that I had done, so I'm curious to see what's driving that additional subsidy, if that is accurate. On Berlin Gigafactory, I think the timeline here is most interesting, specifically when they say max of 2 years from the start of construction, which would obviously put production then being the beginning of 2022. With that, I think probably makes more sense for us to skew our expectations towards the latter half of 2021, which I think is probably the case already. Same with the higher CapEx expectation. Model Y stuff, I think that was mostly known. And then from the other tidbits, I thought that full self-driving take rate was super interesting. 27% is probably higher than I would have estimated. If we go back to the revenue and margin conversation, that would mean that full self-driving is generating on average about $1,600 per order. So at the new $7,000 price, that would mean the take rate would need to be at least 23% or higher to generate the same average increase. It wouldn't be terribly surprising to me if the take rate did drop a few percentage points with that price increase on November 1st. So I don't think that's going to drive a lot of additional margin or revenue, at least until we start seeing more robust features roll out. And then lastly, on the Model S range, increasing 15% per year. Right now, the longest range Model S has an EPA range of 373 miles. So if that increases by 15% for next year, that would be about 430 miles of range. 15% on top of that for the next year would be 493. So I don't know. I think this kind of implies a minimum to me and may not account for the Plaid powertrain, because if that matches what's in the Cybertruck, it's going to be a lot more than 430. So next year is going to be a really exciting year for Model S and Model X, I think. And with that, we will wrap up for this week. But before we do that, of course, I want to say a huge thank you to everybody supporting this podcast on Patreon. I could not put out this podcast. I could not do interviews like I did yesterday without all of this amazing support. You all make this possible, and for that, I'm extremely appreciative. If you want to learn more about supporting the podcast, you can find out those details at patreon.com/Tesla Daily Podcast. Special thank you this week to Matthew Levin, who increased his support up to the gold level. Really appreciate that. And to our new silver supporters, Nikhil Roy, James Higgins, Scott Perryman, Dave Griffin, and Jeremy Abbott. As always, huge thank you to our Ludicrous producer, Vincent Smith, our platinum producers, Rob Gill, Jeremy Cooke, Rish Singh, Nick Wood, Fela Winkelmolen, and Troy Cherasaro. Our platinum supporters, Will Brocklebank, Trillium Smith, Evan Stair, Tyan David Dundas, Rick Senta, Todd Ludington, Tesla in the Gong, Cristobal Boateng, Brad Rode, Alan Rudnick, Timothy O'Grady II, Andre Kent, and Saeed. And then, of course, all our gold supporters, including Joel Sapp, Andrea Fabretto, Michael Pastroni, Robert Miracle, Brett Young, Craig Murphy, Julian Roloff, Anders Reffeld, Tyler Crawford, The Goobermans, Guy Masters, Daniel Erickson, Joris Pomans, Nathan Lucht, Gregor Weisgerber, James Smith, Joe Bush, Amir Tobani, Tim Turnstrom, Brian Karotis, Nick Mark, Ron Rubico, Matthew Lipton, Brian Anderson, Tony Naff, Pat O'Shea, Felix Granberg, Kelly Bergman, Dwight Schum, Samuel Zong, Pitt Hostetler, Callum Burnett, Jason Daly, Urban Lindeskog, Paul Dobbins, Bian Concepcion, Anders Jensen, Mike McHenry, Stephen Lewis, Daniel Andy, John Ferreira, Will Berger, Ryan Scanlon, Mark Zilka, Dale Lutz, Lars, Chris Dasbach, Karan Varandani, Nils Engelking, Christian Moore, Jeff Lowe, Steve F., Christopher Bauko, Burton Torgerson, Andrew Clark, Josh Seablum, Brad Lettner, Spencer Gravel, Peter Kuba, Jeff Trapino, Michael Thomas, Dustin Hart, Crypto Dread, Nicholas Latowski, Louis Ferris, Sam Pasek, Danny Hughes, Greg Nichols, Paul Vieger, Eric DeBrune, Doug Wandell, Ali Nasri, Roger McMorrow, Matthias Monkmeyer, Joseph Pai, Alan Levy, Ryan Terry, Paul Meester, Jim Prihoda, Chris Duggar, Eric Stewart, Cos Cosmos, Joshua Kessler, Christopher Carroll, Seamus Johnson, Duncan Ashworth, and Peter Vanderlyn. Have an awesome weekend, everybody, and I'll see you on Monday for the December 16th episode of Tesla Daily. Thank you.